Hey folks, welcome back to the channel. I have not even looked at the market in the last couple of hours, so I'm going to bring that up right now. Last time I looked at it was pretty positive. Got a couple of requests to cover Xpong earnings here, and I'm going to take a look at that, and we're going to discuss what those are. But I want to caution you about reading anything into the Q1 earnings for Xpeng. Right now, I think that's a lot like trying to read into Q1 earnings of 2020. There's so much going on right now that those Q1 earnings are basically the distant past, right? They might as well be 100 years ago. Also, they're pretty much in line with what I expected, and I'll go over those in just a moment. I hope you guys had a chance to look at the video that I released earlier today. I spend a lot of time talking about what other people think about the market and what other people's predictions are, and so I finally made sort of an in-depth video on kind of the mechanics of this bear market, what's going on right now, kind of what you should do about it. The fact that I think that if this was a basketball game, we're already in the second half of the bear market. And it's kind of a waste of time to talk about whether or not we are in one. Let's just assume that we are, and let's invest around that. And anyway, check out that video I made earlier today. I think it's actually pretty good. It gets a little nerdy. I'm going to admit it's quite detailed, and I talk about a couple of things that were taken out of the calculations that were used to value assets. And that's part of what's going on right now is that nobody knows exactly how to value an asset, in part because we don't know exactly where interest rates are going to go. Also, in part that these calculations have just been left out of asset valuation for quite some time now because interest rates have been very close to zero. So yeah, let's talk about what comes next. I am probably a bit more optimistic than most on the market. I do think that we are sliding into recession. I do think that we're in a bear market. But one of the big reminders from that video that I did earlier is that bear markets end a lot sooner than recessions do. And a lot of times the bear market ends long before you even know that the recession is over. So yeah, so please check out that video from earlier today. It's not getting a lot of love from the YouTube algorithm, probably because I haven't put out one that's like that long and in that general in that amount of time. But happy to talk about anything you guys want to talk about today about what comes next. Had a couple of requests to take a look at Xpeng. Had a couple of requests to talk about supply chain issues. Yeah, you work in sourcing and supply chain. It's not looking good. Kind of depends on where you work. So I'm talking to some people that work in other industries right now, and they seem to think that one of the things that's going to start abating pretty soon here is the semiconductor issue, because there's a lot lower demand now, because consumer spending is shifting to like experiential type things. They're shifting to like gift cards. It's shifting to eating out. It's shifting to travel. There's a lot less demand for consumer electronics, which is taking some of the pressure off the supply chain for semiconductors. And also, we've cut a certain country out of the market for semiconductors as well, and they were a major consumer of semiconductors. So it's possible that we start to see some relief in that. Now, what does that affect? I was talking to someone last Thursday, and they were telling me about shopping for a car, and that they shop for a number of electric vehicles. They liked what they saw. They wanted to use it as a daily commuter. And when they went in to check the price of that vehicle, it was basically at $10,000 over MSRP, their manufacturer suggested retail price, which he thought was ridiculous. A $40,000 car is now a $50,000 car. And yeah, so I think that that's going to help sort of lower, unless the car companies or the dealers decide to keep those prices up for other reasons. There's always another reason that they do that. But dealers are actually catching a lot of heat right now for being so far over manufacturer's suggested retail price. So let me see here. I'll leave it here. Well, maybe Elon siding with Republicans because he's getting no love from them has made the Tesla Trump car should have stayed neutral. Because he gets no love from the Dems. I don't see why. He goes to the GOP. They love him, but love races. Okay. Yeah, I've delved a little bit more into politics than I have lately, but I'm the opinion that he cited with that was just done really crassly. Here's what bothers me about Elon Musk. It's not so much the antics that affect the share price. It's the fact that he knows that a lot of Elon bros are remarkably dumb, right? And I'm probably not talking about you if you're watching this channel, but look, the way a news story works is that you write a hit piece on somebody. You can't just put it out there. You always call the person that the hit piece is on. You get their commentary on it, and you let them know it's coming out, and then you release. So the idea that he suddenly said, "Oh, I came out as a Republican, now I'm going to be attacked," that's bullshit, and we know it is. We know, and in fact, the timeline was released by a Business Insider. They're like, we called him 2 days ago. We said that we were going to release this piece. Did you have any comment on it? Look, and like I said, I don't really care about what happened in 2018 or 2016, whenever this happened with this particular settlement. I've been through lawsuits before. A lot of times you settle the lawsuit because it's going to cost you too much to fight it. You get to still say, I deny anything that happened. They get to get their check and they keep quiet, right? And they have a non-disclosure agreement. So we're never really going to know exactly what happened in this case because it never really saw the light of day, right? Basically the non-disclosure agreement and the court case is settled. Everyone walked away dissatisfied. Somebody got a check. That's the way those things work. But in this case, though, him trying to say this is going to be a political attack, that's just BS. And it's just a lie. He knows it, but he also knows that the vast majority of his fans are just going to accept it. Now, whatever he says, because basically Elon Musk is becoming a religion. Now, I have absolutely been guilty of fanboying Elon Musk many, many times, right? I'm really impressed by his intellect, really impressed by his vision for a carbon neutral world, and really impressed by simply the out of the box solutions that the man comes up with for certain problems, right? But yeah, I'm a little tired of the antics. They're starting to get on my nerves here. So let's talk a little bit more about electric cars, if that's the direction we're going in. And frequent watcher on my live stream, Elon's, hello. Hope you are well. Thoughts on the X-Bank earning reports, and another one from Leo Wu. Leo Wu's been around on my channel for quite some time, and so let's talk about that. Let me see if I can find. I'm going to share my screen here, folks, and it's going to take me just a moment. Share screen. All right, so let's share the screen here, and we're going to be looking at the. Hold on, let me know. Okay, you guys can see that now. All right, we're going to be looking at XPeng's first quarter 2022 unaudited financial results. All right, so let's talk about a few things. I don't know if you can see this right here, but they always, and not every company does this, but XPeng does this religiously. They put up sort of this handy comparison for the last couple of quarters, and we can look at their numbers. So you see that in Q4 of 2021, they delivered 41,751 vehicles. Q1 of 2022, they delivered far less than that, 34,561. Not a reason to panic. Okay. I covered this at the beginning of the year when I made my predictions about XPeng, saying that, look, some of the numbers from January and certainly going into the beginning of February are going to look like crap because of the Chinese Lunar New Year, where people are either traveling home or they're too drunk to buy a vehicle, right? Because it's a big time for celebration. This is going to happen every single year. So if you're an investor in the Chinese auto market, then you should know that around Lunar New Year, there's going to be absolutely no vehicles sold whatsoever. So trying to glean what is happening with this company from their Q1 results in any one year is going to be a little difficult. So here's what I did find interesting from the Q1 results, though, that is very encouraging. P5 deliveries grew by close to 30% in that time period when we had this hugely negative impact in sales, right? So one of the things that I like about the P5 is actually, I don't know that much about the vehicle other than it's a smart family sedan. It's smaller than the P7 and it comes at a lower price point. But here's what's really, really good about that. That lower price point means that they have a much, much broader market, meaning there are many more tens of millions of more families that can afford this vehicle. Also, because of where they're located, how their supply chain works, they've been a little bit less affected by some of the lockdowns that have gone on. They're based out of Guangzhou in the south of the country. Shanghai has been where the most severe lockdowns have been, although Guangzhou has been locked down as well. There are ships out at anchor there that have been there for a while. But look, the decline in deliveries for P7 sports sedan, like I said, I'm not all that concerned with that. That has a lot to do. And if you notice, they didn't even put the G3 on here. The G3 is their little SUV that they sell too. Those sales are not insignificant, but they're small enough that they're not even excited about them. They're not featuring them. And I made a prediction at the beginning of the year that they may actually discontinue that model of vehicle sometime in the near future, largely because they're not really including further production facilities for it in any of the two new factories that they're building, right? And they're I think it's with Hyma Motors. I can't remember which. I think they have a partnership with Hyma Motors, which is a legacy auto producer that's partially owned by the government in China. And that contract production agreement is up this year. They're either going to renegotiate it or discontinue it. And if they renegotiate it, I think they're in a much stronger position to renegotiate this year. So a couple of interesting things. They have gone away from the sort of Tesla route here. They're going with a physical sales network. So they continued expansion of the physical sales network out to 366 stores and 138 cities as of March 31st, 2022. China's not like America, where we maybe have 18 or 19 cities with more than 1 million people. I think they have over 100 cities or something like that with 1 million people in China. So 138 cities could literally be access to 138 million or more people. I think it's got to be more than that. Guangzhou alone is the Pearl River Valley is like 57, 58 million people. So XPeng's self-operated charging network further expanded to 933 stations, including 757 XPeng self-operated supercharging stations, 176 destination charging stations as of March 31st, 2022. So XPeng is also part of something that's like PlugShare here in the US, where they have almost 100,000 charging stations all across China at this point. So the idea that it's not difficult to get your car charged in China at this point if you're an XPeng user, or if you're a user of a number of other different types of vehicles. The concerning thing that I'm looking at here in this report is gross margin. Okay. Margins are actually fairly low with this company in comparison to somebody like Tesla, right? And I don't know exactly what the reasoning behind that is. Part of that, of course, is the per vehicle deal that they have manufactured in the G3, but the G3 is a much smaller portion of their vehicle sales than it has been in the past, and some of it has to be with what they're dumping into their new factories and things like that. But if you look down a little bit more down here to like vehicle margin, which is gross profit of vehicle sales as a percentage of revenues from vehicle sales, was 10.4% in the first quarter compared to 10.1% in the same period of 2021 and 10.9% for 2021. For some reason, I'm not comfortable with these numbers and how they're calculated and the data that we're getting. Something doesn't look exactly right with these, and I'd like a little clarity at some point. Maybe, I don't know, maybe I'll actually try and get on one of their calls one day and force through a question or something like that. I don't even know if that's possible. So net loss is narrowing a little bit, so that is good. They have a pathway to profitability as long as they don't announce another factory build out, which I'm certain that they're going to do. So am I in the jet flight path today or the helicopter flight path? Let me know if you guys can actually hear the flight path here. So yeah. All right. Let me see here. Telephone or Tel 6699 says Ocean Financial Services is a large bank in the UK. The fight against inflation is different this time. People need energy and food. That is the battle. So there's a couple of different ways to look at what's going on right now and the recession that we're likely already in. We're likely already in the second half of the game here when it comes to the recession. We're likely in the well beyond the second half of the game here when it comes to the bear market. The most dangerous words in investing are this time it's different. Okay. We have pressures that we've seen before in the market. People need energy and people need food. We've seen these pressures before, particularly in like 1973, 1974. That was one of those big times that we saw that, where the West faced an oil embargo. There were all kinds of issues with, there were all kinds of breadbasket issues in the Soviet Union, as well as in North Africa, where we had people starving. We had food prices that were going up. That is the battle in this case. But this is a supply side induced inflation. This is really a result of red hot demand and supply shock at this point. So the Fed's response to this will probably not be as severe as it was in the 1970s, in the 1980s, because and I'm talking the European Central Bank as well, and the Bank of England. It will probably not have to be quite as severe as it was in those time periods for a couple of different reasons. But number one, inflation is global at this point. It's not a localized event. Basically, everyone is suffering from inflation. But I was just looking at some research that was done by professionals here, where they're talking about just how much the Fed is going to have to jack up interest rates in order to tame inflation, if interest rates were the only tool available to them, and what would be their target unemployment rate, because the target unemployment rate is actually kind of a big deal for the Fed, meaning that they want to bring inflation down, they have to bring unemployment up and reduce demand, right? So they're saying that in today's environment, if you only had the interest rate to work with, right, you only had the federal funds rate to work with and no other tools, that your target rate for unemployment would be right around 7.7%, right? So how much would you have to raise interest rates to trigger a recession that would get us close to 7.7%, right? So that's kind of the issue here. I was on another call this morning with my company where I discussed this, where I think that the natural end to this particular bull cycle or market cycle should have been around 2018, late 2018, early 2019. That we already had cracks in the foundation of the economy then. It was already overheating a little bit. The Fed was raising interest rates. We had just at that point taken sort of risk-free investments back up to about 2.2, 2.3%, meaning the 3-month T-bill was paying about 2.2, 2.3%. That was the first time in a very long time that it had been over 0.5%. And the market started to crumble. Well, the market's not the economy. And I think that I really think that Jay Powell caved to political pressure at that point, meaning that he was accused of basically of crashing by someone unhinged in the government, of essentially crashing the economy on purpose. I think he caved to political pressure on that to a degree. Yeah, it's nice to extend a market rally, but I also think that it set us up for what happened later on down the road, because by the time the pandemic happened, we already had a bloated balance sheet. We were already at near zero interest rates, and the Fed just didn't have a lot of dry powder in their kegs in order to get the battle going here against the economic slowdown induced by COVID. So that's kind of the historical issue going into there. So, and if you look over a long period of time, when the market went up from 2018 to 2021, it doubled essentially, right? Which is one of the fastest doublings of the market in history. It was something like 2 times above standard deviation, which is, there should only be like a 6% chance that you can expand the market at, roughly 2 times standard deviation in the space of 3 years. I did this calculation this morning, actually, because I'm a giant nerd. Okay. But so when I'm looking at that, I'm like, okay, so it's all induced by 2 things. Number one, zero interest rates, zero return on a risk-free investment. The investor basically had no choice but to go into the market at that point. It's not a wonder that asset prices expanded. What surprises me is that people, and me included to some degree, were willing to pay a higher and higher and higher price to get into these assets, meaning that price to earnings multiples expanded pretty rapidly, right? And that accounted for roughly 70% of the gains in the market from 2018 to 2021 was the expansion in price to earnings multiples, not the expansion in earnings growth, right? So about 30% of that expansion of the run up in the market was because of earnings growth. Normally those are switched 70% earnings growth, 30% expansion of multiples. And then, when you get to the top of market, you kind of see a contraction at that point. So the point that I was trying to make in the video, that I did earlier, which I really hope gets off, is that I think that the top of this economic cycle, the market would have hit about 3,600, right? And instead of the 4,800 where it hit earlier this year. So I think that we're close to the fair valuation of the market, or where it would be at the end of a normal market cycle. And now we still have to drop at this point. So I think that somewhere 15% north or 15, and we're already below 15% north of 3,600, but somewhere between 15% either direction from 3,600 is where the market ends up, where the bear market ends, and we see a turnaround from then. And I'm telling you, the turnaround is going to be equally as violent and quick as it was after 2008, 2009. March 9th, 2009, one of the worst days of my career, bottom of the market. I didn't know it was the worst day at the time, right? Worst day of the market, right? 2 months later, the market's up 27.5%. Everybody missed out on that. Everybody who said, I'm going to sell at the bottom, get back in, everyone missed it because we didn't even know that was the worst quarter in that recession. And between March 9th, 2009 and January 10th of the next year, the market was up 57%. Well, guess what? We didn't have any positive GDP growth in that entire 8-9 month span, zero. And the market was up 57% because bear markets end a whole hell of a lot sooner than the actual recession does. So long before the end of the recession, you're going to see a bear market. And I have a chart here that I'm going to talk and try and bring this up at the same time and show you sort of how economic cycles work, right? But it's pretty. Dang it, my computer is just not cooperating today. It's being very, very slow. So let me see here. All right, let me see if I can pick this up. So anyway, what I'm saying about Xpeng though is try not to pay too much attention to these Q1 earnings. Q2 earnings are going to be far more impressive in terms of the information that they convey. We are looking for really bad Q2 earnings for everything coming out of China, like really, really bad. I think really fairly substantially bad earnings coming out of Tesla as well, which would provide, especially in the case of Tesla, I think it's going to provide a really good opportunity to, I think it's going to provide a really good opportunity here. So let me know if you guys can see this that I'm pulling up right here. This is a market versus economy cycles and sector rotation, kind of showing you what happens as the market cycles, right? So right now, the market bottom happens long before the full recession happens, right? So the market bottom happens, you start to see an upswing happen. By the time we're in full recession, we've already recovered from our losses. We're already in a bull market. It's not just that we're making up the losses we had, that by the time we hit the end of the recession, in most cases, we're already in bull market territory. Early recovery, we're already close to the top at early recovery. We hit a market top, and then the market starts to crater and decline. Let's say this was September, October, November of last year, and this was spot on. Basic materials, energy, and staples started to soar at that point, and that's what's causing the inflation right now. Like we probably should have started raising interest rates about September, October, November of last year. And this is what always happens with the Fed. They know that this happens, that they're always late to the game, right? So we see technology in 2020, 2021, technology, industrials, basic materials start to shoot up. Remember the whole lumber costs during the pandemic. Remember all of your technology stocks, and of course the rise in prices in semiconductors. Here we start to see the rise in oil. We start to see the rise in other basic materials and staples like corn, wheat, and all that sort of thing. Now we're in the bear market here. And the rotation you want to be in is energy, exactly that right now. You want to be in staples, exactly that right now. And that's just sort of cushioning your blow. Energy is the only sector of the economy is making money, but staples and healthcare are kind of where you want to be overweight right now. I'm not telling you to go out and sell everything you have and jump into these. I'm saying that new investments might want to be overweighted in this sector for right now. Late bear market, you're looking at finance. And I can't stress this enough, is that late bear market is where you really want to start investing in your financials, your Wells Fargos, your JP Morgans, your Goldman Sachs, your fintechs. This is going to be where you want to hit those because they're all going to do really, really well in the next era coming down the road. So you can see that the market and the economy aren't the same. They don't move in lockstep. They're related, but one is ahead of the other because the stock market is a forward pricing mechanism it's a forward pricing mechanism for the economy. So I don't know if you've ever seen that graph or like that or not, but it's really useful to understand. So Leo Wu sends good vibes. Thank you so much, Leo. Thank you so much. Good vibes back to you too. Speaking of good vibes, super chat features are on if you guys feel so inclined. So let me see here. Hi, Jason. What do you think about Google and its advertising revenue in recession? So that has been something that's predicted for a while. That advertising is just going to shift or change, right? And some of it's just shifting to other means at this point. Like I don't do it. I don't do anywhere near as much Google advertising as I did in the past, largely because they allow me to target keywords, but they don't allow me to target demographics very well. Um, so I mean, I use a lot more of Facebook, Instagram targeted advertising for my own businesses, just because I can, physically target people that have characteristics, not physically, but I can electronically target people that have characteristics that I'm looking for my businesses. So, yeah, let me see here. Patrick Dillon says, "What are your thought on car dealer stocks like Carvana?" Um, well, I think that in terms of bottom fishing right now, it's probably a pretty good idea, especially when you're looking at like used car dealerships. And well, those are the only car dealerships that are actually public traded. All the others are not publicly traded at this point. So I think in terms of bottom fishing, it's a good deal. In terms of how much money their businesses are going to make for investors going forward, I'm of a couple of different minds on that. I'm not convinced that what they're doing is really radically different than an AutoNation or CarMax or something like that. I know they're using AI. I know they're using apps to target this and that, but there's certain things about the car dealership that I'm just not sure that they fundamentally changed. So I want to reserve judgment on that. As far as a bottom fishing expedition and turning that around for a shorter term investment, I think it'd be hard to lose at this point for a shift and for Carvana, unless the businesses completely go under. So Anthony Walker says, "What do you think about this trading day?" Man, I barely had time to look at this trading day. So Nasdaq up 180 points, Dow up 1.9%, 618 points, S&P up 1.86%, 72 points. Um, yeah, like I said, I think the bottom of this market, and I know I said 3,800 before was probably the bottom of the market. That really wasn't my assessment, though. That was based on other experts that I heard speaking. After kind of going back and doing the math out, my bottom of the market would be within 15% of 3,600. So I do think there's room to go under. Um, I do think there's room to go under 3,600. And you're starting to see predictions about the market come out from major financial companies right now. And a couple of those, it was a Bank of America says possibly 3,000. A couple of other companies said possibly 3,500. And my prediction is that the bottom of the market, if it goes below 3,060, I'd be shocked. Okay. I would be absolutely shocked. And that's within 15% of that 3,600 is Bank of America's target. So is that a bad time for us? It's a bad time. But like I said, right now, I think we're just approaching fair valuation for the S&P 500 for the top of an economic cycle. So I'm a little bit worried going ahead, but I tend not to make any changes to my investments just based on the economic cycle. I tend not to. So here we go. Do you think Tesla is overvalued? Man, that is a question that I've asked myself every single day since 2011. Okay. And let's answer this objectively, and then let's answer this with with my future goggles on here. Okay. So objectively speaking, at no time in its history has Tesla ever been fairly valued. It's always been overvalued and to a ridiculous extent. Okay. Uh, but and that's if you value them as an automaker. But there's an argument to be made that even valued just as an automaker, without self-driving, without really energy making much of a contribution, without their energy storage business making much of a contribution, just cars alone, if they're going to hit sort of like GM level of production in a few years, which is like 7.7 to 8 million units per year, there's an argument to be made that stock is worth $1,500 per share. There's an argument to make also that if they're going to reach their goal of making 20 million vehicles per year, which would literally be 1.5 to almost 2 times, well, no, it'd be almost 3 times as much as the largest automaker today. there's an argument to make just based on the auto business, they would be worth roughly $2,600 per share. Okay. And if they could do that in a decade, which is what they're saying, in a decade, they're going to be making 20 million vehicles per year, then it's worth 2,600 per share. That's not counting everything else in their business that might do well. Like I've not added in Neuralink for anything, or actually that may be on a different holding company, but I haven't really added that much of the energy calculation in there. I have not added that much of the energy storage calculation in there. But this is all, we're looking at earnings growth, and their earnings has to grow fast enough to meet those expectations in order to justify that future price. So far, it's done that, right? And it's more than done that. This stock has made a lot of my wealth for me. And occasionally I get very unhappy when it drops by almost 50% like it has done in the last couple of months, but I'm not selling anything. I'm going to try and buy more in this environment. I'm not sure that I can scrape up the money to do so, but yeah. So is it undervalued? No. If I'm valuing it based on today's earnings and today's metrics, it's still very much overvalued. If I'm looking at 5 years down the road, I'm saying it's getting, basing on an earnings growth model, it's getting pretty close to undervalued at this point. So yeah, that's kind of my opinion there. But and you have to acknowledge the fact it's never it's never been on the fair valuation. All right. So it looks like Intel's and Neo's 2 waiting for Neopark to come online. So Neopark was originally supposed to come online, I think, beginning of April, and it is not coming online. From what I understand, it's not far from coming online though, and that's going to add an immediate sort of 100,000 production capacity. But by the end of the year, Neo should have roughly 600,000 unit production capacity, and possibly as soon as early third quarter next year, they could have up to 1 million in possible production capacity. So this is one of the reasons why last year I was a bit more optimistic on XBong. This year I'm a little bit more optimistic on Neo. But remember, my optimism is always months, years in the future, right? I think XBong has they're going to be the victim of timing here. Meaning by the end of this year, their production capacity is still going to be stuck. Until the end of the year, their production capacity is stuck at somewhere between 200 and 240,000 per year, depending on the analysis that I've seen. By the end of the year, they might have production capacity of right around 400,000, right? So, and then they're going to be stuck there until their next factory finishes. That next factory only has a capacity of about 100,000. And then as of right now, they haven't broken ground on anything else. But they built their first factory in 15 months. This one's being built in 15 months. The next one's taking like 13 or 14 months, right? So they're getting better at building these small run production factories that have like a capacity of about 100,000 or so. And I think they can continue to build in that manner, or they can go the route that Neo did and try to build something really, really large like that. I don't know what their strategy is when it comes to building out their expansion, but I do know, and I think this has to do with what's going on right now with COVID, is that they are rumored to be looking at more sites for more factories, but they're trying to get geographically diverse within China. So yeah, see here. Thoughts on larger Chinese companies, Baba, Tencent, JD, etc. I would focus on larger U.S. investments at this point. Like I said, China may be considered uninvestable here for the next couple of years unless you have a strong appetite for risk. They haven't figured out a lot of things about when it comes to regulations, how they want to crack down on companies, and in the pressure seems to be on Tencent here. And Tencent is a giant conglomeration that just does just about everything. And it seems like the Chinese government is not confident, not comfortable with that. And they want to turn some of these larger companies, I think, into sort of anti-conglomerates where they're going to spin off these companies into smaller units. So they're going to go public maybe on the Chinese exchanges. I don't know. But I just saw an article on Barron's today where they're predicting that there's going to be more and more companies going public on U.S. exchanges here. And I think that the demand for those stocks will have cooled off quite a bit. So But I don't know. I could be wrong, particularly on that. It's always seems like there's a new wave of believers in Chinese stocks. I have always been skeptical from day one because I was involved in some of the early days of really, really bad Chinese scams. Yeah. So let me see here. Any companies at risk of being delisted? Yes, they're all at risk from being delisted from U.S. exchanges, partially because they're not even allowed to participate in the sort of audits that the SEC wants them to participate in. And if you look, most of these companies now that are traded on U.S. exchanges have an alternate strategy. They're listed on the Singapore exchange. They're listed on the Hong Kong exchange. They're listed on a domestic Chinese exchange. So they have alternate ways of seeking outside capital, and they're doing multiple listings here. So yeah, I do think that any company is at risk of being delisted from Chinese exchanges. If that happens, though, your your shares are going to go over the counter, or you're going to get an 8 share or something like that, or maybe have shares on the Singapore market. So um, China has a middle class of 400 million people, massive market. They do, but their definition of middle class is quite possibly very different than ours is. Okay, I don't know that those out of those 400 million people, how many of them could afford to buy a 26 or $27,000 Xpeng vehicle. It may be that they can't really afford that. So the middle class may mean something very, very different. Very different. So, Vane H, thank you so much for your super sticker there. And I assume that's in Canadian dollars. Um, so I saw a great video today on the Looney, and it was really funny. But yeah, I guess I can't share that here. But anyway, other thoughts on the market today. Um, I wouldn't looking at the returns of the market today. It looks pretty good. Market's up 2%. The Dow's up 2%. S&P's up close to 2%. Nasdaq is up 1.6% or so. I am not taking this all that seriously. Day to day runs in either direction usually aren't that statistically meaningful over time. The market rarely hangs on to a gain. Remember though, really quickly. Hold on a second. Hold on a second here. Hey man, question. Let's say the new order, blah, blah, blah. What the hell happens to our entire market system? Just wondering. What do you mean by the new order, Collins gang? That's and are we are we going down a conspiracy rabbit hole here? Because nobody loves conspiracy more than I do. I just don't believe in any of them. And I don't know if this is like New World Order stuff. I don't believe in any conspiracy, and I'll tell you why. The people that believe in conspiracy theories probably have not worked in management for very long, or if they worked for the government, they were not in management, and I'll tell you, because there's a basic axiom when it comes to like looking at these grand conspiracies. Anything that can be adequately explained by incompetence cannot be probably explained by malice, meaning that where you're seeing malice is probably a result of incompetence. There isn't as much control over systems as people think there is, and it would take a lot of competence in these positions that people just don't have. I've worked with these large organizations. You don't have a way to transmit messages real far down the chain of command there, and it's very hard. It would be impossible to pull off the vast majority of conspiracies that people think they're going to pull off. And to be honest with you, I find the mindset of people who believe in conspiracy theories to be enormously entertaining, but at this point it's starting to get a little bit dangerous here. And I'm not going to entertain that or discuss that on my channel so much today. But let's say if that happens, what happens to the entire market system? What they want is basically state capitalism. Okay. So the difference between, let's say, Nazi Germany state capitalism and late Soviet Union state capitalism in terms of their system and the way their so-called markets worked really wasn't all that different, right? So and I'm talking about like business-wise, there wouldn't be investment opportunities for the average citizen. There just wouldn't be. It would all be for the oligarchy. And if you don't think that we don't have an oligarchy here, you aren't paying attention, especially what's his name, Jeff Bezos is hinting that he wants to make a run at politics. Um, I think that's pretty much the worst thing. The worst thing that we could possibly do in this country is start encouraging oligarchs who are actually competent to get into politics at this point. We should be actively discouraging them from getting into politics. Running a company is not like running a country. Luckily, the first couple of those that we elected here in the U.S., they were terrible presidents, right? Yeah, but anyway, just my opinion on that. You don't have to take it all that seriously. But yeah, so let me know what you guys want to talk about in terms of the market today. Hold on a second here. Our analyst says inflation will remain high until mid 2023 and then tail off. Yeah, I would say that is probably correct. So the idea that the Fed is going to have to raise interest rates high enough to crash employment to like 7.7%, that was just the idea that they would have to do that based on the only tool they have is raising interest rates. But we all know that they have balance sheet runoff, they have selling securities on the open market. They can raise deposit requirements. There's a number of other tools that the government or that the Federal Reserve would have in order to help control inflation that they're not using right now and they can use in the future. There's also the organic demand destruction that is likely to happen because of inflation, meaning inflation is going to cause the end of inflation here. And oh, wow. Okay. Let me stop sharing my screen so it looks so weird like that. Like I said, there's also the demand destruction aspect, meaning that if prices for fuel are getting so high that people can't afford to buy that next big screen TV, they're just not going to buy that next big screen TV because they need to afford fuel to go to work. And that's in turn going to cause a reduction in demand for big screen TVs, which is going to cause them to lower prices, which we are already seeing. Okay. If you look at Target and Walmart's earnings, and I might get these reversed, I don't know, but I think Target had not revenues, they had inventories that were 43% higher than the year prior, and Walmart had inventories that were 32% than the year higher. And in their quarterly report, they were complaining that they had to lower prices on those items to make room. So, no, I am very, very convinced that demand destruction for certain things is already happening. I just don't want it to happen across the board for all sectors of the economy. I much prefer that it happens with things that are going to help ease supply chain issues. I'm happy that consumer spending is shifting to experiences. It's shifting to eating out at restaurants. It's shifting to travel. It's shifting to huge shift to online learning. People are learning new skills. So yeah, and it was just an article that I read yesterday where the amount of money that people are spending on like online coding camps and any kind of skill camp and certification camps, all the stuff that are programs online is absolutely amazing. So, if we had a 30% crash across the board, what are your top 5 stocks that you would add? Huh. What are the top 5 stocks that I would add if we had a 30% crash across the board? Well, considering that we're already close to that, no, I assume that you mean a 30% crash from now. So the 30% crash from now would probably happen if we had one. It would probably mostly happen in financials. So almost all of the stocks I would, and I'm a technology investor for the most part, but I would be pretty heavily weighted back towards financials in that case, because coming out of that recession, coming out of every recession, at the end of every recession, they have record earnings. That's just the way it works. The spread between interest rates is so high, lending starts to increase immediately, and balance sheets look really, really good. So so financials would be the way I'd go. Probably like Goldman Sachs would be one of them. That would probably be the big one. I wouldn't necessarily not like a TD Ameritrade or something. I want somebody that's invested that does like a lot of investment banking, like Morgan Stanley. You're going to see massive returns out of those. Not only that, those stocks tend to pay a small dividend as well, and those stocks tend to not be volatile once the economy comes back. Right, they're not that volatile. So let me see here. Bain H says Ionic, Microsoft Azure, Amazon, AWS using the cloud. Honda just became a customer, sharing battery cells and self-driving. Like the idea of them. What do you think, Jason? Um, yeah, I need to read a little bit more about that. There's so much news coming at me right now when it comes to investments in battery technology and investments in the battery development supply chain. I'm getting so much information right now; it's really hard to keep up. Like I did a I was reading an article on some purchase of a miner, and then I realized it happened like 6 months ago, and I just didn't pick up on it. So, yeah. Um, any thoughts on Tesla price next month? Is now a great time to enter or wait a little bit? So I do think that Tesla is oversold right now. Not based on its actual value, definitely not. But I think it's oversold right now in terms of its technicals. I'm not like a technical trader by any means, but for Tesla, technicals are a little bit more valuable, largely because of how popular it is with the retail investor, the non-professional investor. That's a little bit more affected by psychology, right? Um, I do think that second quarter earnings are going to be pretty bad, and I think that there's a chance that it could dip into the 500s. And if it does, I plan to buy as much as I can. But if it doesn't, like, so the other thing, I've actually stopped selling options on Tesla right now. Number one, because I don't want to lock in my losses, or well, I don't have losses, but I don't want to lock in that price and get caught flat footed when the share price turns around, which I usually sell covered calls on Tesla to generate income. And I've stopped doing that because I don't want to get caught flat footed when the market turns around and Tesla jumps back up to $1,000 a share and starts marching north from there, which I firmly believe is going to happen. And there's going to be upward price pressure on Tesla as we get closer and closer to that August date where they're going to vote, which it's a foregone conclusion. They're going to vote to split the stock. And then after that, I think the stock will probably decline a little bit. It always declines immediately after a split. There's a lot of profit taking, right? And it'll decline by another 30 or 40% by that point. But I think it'll get close to $1,000 a share before that. And then it'll decline by 30, 40% after that. And then it'll start climbing again. But I don't see it really north of 1,000 permanently until they come out with a new model of some sort. And I think that's got to be the semi on the road, or it's got to be the Cybertruck. But are you guys as anxious for the Cybertruck as I am? I'm starting to doubt that the Cybertruck is going to come out in the form it's going to come out now. You know, and he said this before. He's like, if people don't like the way it looks, we can always make it look like something else. The looks aren't as important as selling the vehicle. And I know a lot of people that love the idea of the Cybertruck, and I would probably end up buying one when my wife is not around to object. She hates it. She thinks it's the ugliest thing on the planet, right? So, but I think it would be incredibly useful for my lifestyle. I need a tow vehicle, and but I don't need a high performance tow vehicle. I need something that can tow 3,000 pounds for 20 miles, right? And I know a lot of internal combustion engines could do that. I just don't want to own one of those anymore. But it doesn't look like a truck. And if you don't think that's a big deal, then you haven't lived in the Midwest or the South or anything like that. It needs to look like a truck to sell like a truck. And if you want to take away some of the the Ford F-150 market share, it needs to look like a truck, which is one of the reasons why that, if Tesla had come up with the Rivian vehicle instead of the Cybertruck, I think that it would sell really, really well. So Jepson says Belgium is back. And just to make clear, you're from Antwerp, right? Huh. Oh, Patrick Dillon says, love the look. Looks like a DeLorean. Great. I'm not really that worried about the look, which is why I'm going to buy it. But there's a lot of guys out there. They're going to worry about the look when they throw 10 sheets of plywood in the back, when they try and tow their horse trailer, or they take their boat to the launch. Oops, I got something in my teeth. Didn't even notice it. Sorry, guys. Didn't even notice I had part of my lunch still in my teeth. Okay. So there's a lot of people that are concerned with that. And these are the people that buy trucks and use them as trucks, right? So this is my concern with the Cybertruck. I know that there's a million reservations for it. I don't know that it's actually going to be that hot of a seller when it finally comes out. I will say one thing though, there have to be a lot of people frustrated that it's been delayed and delayed and delayed and delayed. I do find some things that are encouraging. It was the 4680 battery cell that was supposed to fuel that truck. It looks like that production is finally really coming on in earnest. And it, and I don't want to jinx it by saying anything, but I am going to. It definitely looks like there's going to be semis out in commercial packages by the end of the year, and I'm pretty excited about that. So the Tesla Semi, I think it's entirely possible and I know they say it has like a 500-mile range while it's fully loaded, right? That actually isn't enough based on the economics of trucking. A trucker has to make 600 miles a day, not 500 miles a day, just to make his nut, right? When you look at the overall cost of ownership, though, it is lower to own theoretically, it's lower to own a Tesla. The upfront price, though, may scare a lot of people away. So I do think the initial market for the Semi is not going to be long haul. It's actually going to be short haul and day trucking. Think like alcohol delivery guys, right? Which, by the way, people with commercial driver's licenses who do like alcohol delivery, things like that, who work for like liquor companies, they make good money. They make money that's better than a lot of like folks that you think of as being professional in a lot of cases. And I'm starting to see more and more of those folks come in and who have the resources to actually invest and to make real investments. So, Jepson says BYD has good batteries. You got this. Yeah, BYD is basically everything Tesla wants to be, but BYD doesn't know how to make things in volume yet like Tesla did, right? So, yeah, BYD has a great selection of vehicles. They have a great lineup of vehicles. They are rapidly phasing out their internal combustion engine fleet. And this is the month, if not this month, it's going to be next month, where BYD actually outproduces and outsells EVs in China. They outproduce Tesla in China, not the whole world, but they're going to sell more EVs in China than Tesla is. Like Tesla has been the undisputed king of EVs in China since they started selling in China. That dominance is coming to an end. BYD is going to pass them up. But there's some other companies out there like Hozon, and there's other companies out there that aren't even publicly traded on U.S. markets that are producing tons of vehicles that are catching up as well. So yeah, Jepson says, "I like the new car from BYD. Which one are you talking about?" So, the Seal model. So the last model that I really researched in depth was the Dolphin model. So I need to take a look at that. Does anyone know? So Jepson is from Belgium, and I used to live in Belgium a while ago. And does anyone know the French word for seal? So I lived in the French-speaking part of Belgium, but anyone know the French word for seal? Go ahead and write it in the comments if you do. So BYD batteries, so BYD's battery is far more impressive than people think it is, and it's really impressive on the amount of times that it can cycle. It's like that battery can cycle 4,000 to 5,000 times, which is literally 3 to 4 times as many cycles as you get out of some other batteries being sold on cars today, right? It's only about 13 or 14% less energy dense than some of the most energy dense chemistries that are out there. But the main thing is it's super, super cheap. And it runs at a super cool temperature as well. And it's very, very safe, meaning the casing can be pierced without it catching on fire in a number of different ways. Now, there's still a possibility, like with every lithium battery, that can catch on fire. Lithium is just highly reactive. So you guys ever did the experiment in high school where you took sodium and threw it in the sink full of water and watched it explode? Because sodium will react with just about anything that it comes in contact with. And lithium is the same thing. If it's exposed to open air or exposed to any other element, comes in contact with anything, it's going to react with it and form a chemical bond, and that is going to release energy. So everything that is a battery essentially does that with varying degrees of energy density. That's why as you go up to like lithium ion, sodium, potassium ion batteries, they're all going to have this issue that they have the potential to catch on fire, right? So that's I had someone asking me about lithium batteries and flying and all this. I'm like, look, there's no way around the fact that all of those are reactive elements, and if they're exposed to open air, they're going to catch on fire. So, yeah, I have not looked at the new seal. I was actually getting ready because it's been a few months since I've done a BYD video. I was going to do another BYD video. Very interesting company, but interestingly enough, I think I have a BYD video with close to 100,000 views on that, and you get paid very little as a YouTuber to make a video, a nerdy technology video on a Chinese auto company. You get paid very little because it's traded over the market. Now, I get paid per thousand views a lot more for Neo and Xpeng, and I think I know why. It's because you can buy those through your, over the market, or you can buy those essentially easily because they're traded as ADRs. You can buy those easily here. And that used to not be the case with BYD. It used to be you had to jump through a few hoops to get it. So, yeah. So the Seal is the new Model 3 competitor. So did they do away with the BYD Han though? Because that was their original competitor. Which it took me a long time, but I finally found someone that I knew who owned a BYD Han. The P7 is amazing, by the way. I've spoken to a couple of people that own the P7. They're absolutely in love with it. A couple of people that so BYD sells this. Yeah, they've sold their vehicles in Australia for a while. Some of their SUVs, but yeah. So let me see here. Let's take a look. Hold on. Let's look up some BYD news here on yeah, let's look up some BYD news here, and because now I am curious to see this news, and I said I think this website here, autonews.gasgoo.com is probably one of the better sources for English language news on the auto industry. Sometimes it's articles that are just directly translated from Chinese, and it can be really, really awkward. So, Great Wall Motor for China landing vessel trademark to BYD. So, Great Wall Motors transfers landing vessel trademark to BYD. I did not know there was a landing vessel trademark or as a vehicle. So, let me see here. CATL calls rumored worries of potential U.S. sanction false information. Yeah, that is false information. There's virtually zero chance that CATL is going to be sanctioned. Zero. The Wuling Nano. Oh, so they made a competitor to the not a competitor. They made a companion model to the Wuling Mini. So now there's a Wuling Nano. So at one point, the Wuling Mini was selling 50,000 vehicles per month. Okay. This is interesting. Let's take a look at BYD's numbers here. So they put this out every month, and they're a little bit in decline here. So new energy vehicles for BYD means their battery electric vehicles as well as their hybrid and as well as their like plug-in hybrid vehicles. And if you look, it says that 125% year-on-year growth in new energy vehicles, meaning that's just their battery electric and their hybrid electric vehicles. So we look just at battery electric, it's 220% year-over-year growth. And if we look at their hybrid electric vehicle growth, it's 760% year-over-year growth. But if you look at their oil-fueled vehicles, those sales are down 90%. They are making a pretty rapid shift over that. So let's look at this BYD seal here. Huh. Not seeing a lot on this. Sometimes it just has something to do with like I said, it's translated directly from Chinese a lot of times, and sometimes the search is kind of messed up because of that. One of the things, but if you guys don't know about this website, like I said, it's autonews.gasgoo.com, and it has some really good information. Some of it is very propaganda sounding though, so be careful. said, don't even believe what your own mind tells you. This is one of those surprisingly deep t-shirt quotes that I saw at one point where it says, don't trust what your own mind tells you. Very important. Your own mind lies to you all the time about, because it likes things that are convenient, not necessarily things that are true. Yeah. So a lot of really great news. And when you're taking a look at this and at this website, I don't see anything particularly interesting. Oh, here we go. There it is right there. I didn't get it when I searched it, but I pulled up the article from the side. So BYD launches CTB technology and starts pre-sale of the BYD Seal. So BYD today formally announced the cell to battery technology, cell to body technology, battery technology, which is the cell to frame, I assume, just like Tesla does. Pre-sale the BYD Seal, the first production models to use the cell to body technology, kicked off at the same time. So the Seals range is going to be $31,000 to $43,000 after subsidies. So interesting. So besides the CDB, it enables the Blade battery pack. That is the lithium ferrophosphate battery pack. That's the battery that I was talking about earlier, the super cheap one that's made from lithium iron phosphate cathode chemistry, and it's yeah. So it'll be united with the car body more closely, so as to double the vehicle's torsional stiffness. Did it okay, did it have an issue with torsional stiffness? I don't know if it did. So okay, so the battery pack can be involved in transferring the vehicle forward. Okay, so that has to do with the amount of torque that's delivered from the engine directly through the body to drive the vehicle. But if the motors are actually on the wheel hubs, that doesn't really matter so much. So that's a little bit of fluff in here. So that's a little bit of like physics that would have applied to an internal combustion engine with a transmission and an axle that doesn't apply to electric motors. So that's a little bit of like engineering fluff. Okay. Right. So this is riding on BYD's E-Platform 3.0. It's the second all-electric car, the BYD Ocean in the BYD Ocean series. Wow, that's a slick-looking car. Like I said, it's been a few months since I've taken a look at this. They have the sealed off grille and the front hood bulges accentuate the sporty essence for the vehicle. Okay. Like I said, directly translated from Chinese sometimes. So that is an impressive looking vehicle. I do like the fact that these are now coming off with closed off grills. We don't need grills anymore. We don't have radiators. All right. In the flight path of the helicopters. Hold on. And there we go. And so with a stand coupe design, BYD increased side and pop out door handles, which partly contribute to super low drag efficient. All right. Okay. So it's a Tesla. I don't know if this is I'd have to see it up close to see if it's really a Tesla Model 3 competitor. It certainly looks a lot like the Tesla Model 3, but I wonder if it's like a little bit smaller, like the Xpeng P5 though. Pretty interesting though. And like I said, I didn't even know this was under development. And this is one of the companies that I follow. But, this is a company with 250,000 employees in something like 12 countries now. This is a global country. There we go. Ooh, this is interesting as well. The largest publicly traded company and manufacturer of Chinese vehicles that you probably have never heard of, Geely Technology Group. They broke ground on its battery manufacturing facility in Fuling, Chongqing City, with targeted production capacity of 12 gigawatt hours. Very interesting. This is actually the second or third announcement that they've made for battery pack technology or battery production facilities. So quite interesting. So Geely, just as an example, I think they make about 1.6 to 1.7 vehicles per year. They sell them in China. They sell them in other parts of Asia, and like I've seen them in Russia before. I've seen them in the stands and a couple of times. It's been a long time though since I've been over there, but I used to see those vehicles. Now, I will say one thing: they were giant heaps of crap, but this was more than 20 years ago, or right at about 20 years ago when I saw them. But let me tell you how old I am. When I lived in Europe, I owned a Trabant. And it's right when the Trabants were all dying, right? And at that time period, and Trabant was an East German car. It was a two-stroke East German car. Very little outside of the frame, and the engine was made out of metal. Everything else was made from like wood, and there was like this resin impregnated, like sheep's wool inside of the doors to insulate. It was really, really weird. The thing was, it was at the time, all the Trabants were starting to break down and the factories had shut down and you couldn't get spare parts and everyone was buying new cars anyway. But in Eastern Europe, it kind of didn't matter. Anytime my car broke down, I could walk maybe 1 kilometers or 2 kilometers in either direction and find all the parts I needed to repair mine. And it was a two-stroke vehicle. It was really easy to repair. And I actually really enjoyed having that piece of junk. I really did. I was able to get all around Eastern Europe, and I had to I had to hand mix my fuel, of course, with oil because it was two-stroke car. And I think they made them with automatic like fuel injectors, but mine never worked. When I bought it from the guy, he told me I had to hand do it. So, yeah. So the BYD Honda is still there. The Seal is direct competition in size and performance. My question is they look so incredibly similar. They don't look like there's a huge difference between the Honda and the Seal, other than there's a huge difference in the vehicle platform that they're using. So yeah, I like the car too, Jepson, and I think it looks very slick. And from what I understand, the performance of the BYD Han was not in the same league as one of Tesla's vehicles, but how many people actually use the performance that they're paying for anyway? Yeah, yeah, Trabant 2 hectares per gallon, quick, put it in. Yeah, the and man, you could not beat anything. I mean, I had people on mopeds that actually outran me in my Trabant. It was amazing. So Jeff says you went to the Antwerp Polestar store. I'd actually love to hear about that experience. I would love to hear about that experience sometime. If my email is usually at the end of all of my videos. If you want to email me your experience, I'd love to hear about it. Yeah. So Geely owned Volvo and has a stake in Polestar. Yes, yeah. So Geely, like I said, they're one of the largest auto companies in the world that people don't know about at this point, and they are public. And I was reading an interview with their CEO, and he seemed like really jealous that Neo and Xpeng were getting all this attention and had this huge market cap when their company makes 1.7 million vehicles per year, and they have a huge stake in their C platform. It's called the SEA platform, which is their electric vehicle platform for Geely, and then with Polestar as well. So I am backing off buying a lot of IPOs and SPACs. But here's what I am doing. Of all the SPACs that did really poorly last year, I'm taking a really deep second look at those and looking at which ones are a good investment opportunity. Some of the ones that got beat up the hardest was literally because macro market conditions kind of deteriorated right after they went public. And I'm starting to take a second look at those again. So, yeah. So it's been about an hour, folks, and let me know if there's something in particular you want to talk about today. Very happy to catch up a little bit myself on the BYD news. You guys caught me flat-footed there. I did not know what was going on with that. So quite interesting. And the Xpeng reports for their unaudited results, like I said, I would not read too much into those. Don't read too much into those because number one, Chinese New Year in the first quarter. Number two, second quarter, all bets are off, right? We have no idea how lockdowns, well, we do have a pretty good idea. So in Shanghai in April, there were 0 cars sold in Shanghai. And I'm serious about that. The Chinese Automobile Association or whatever, they put out an announcement saying that for the month of April in Shanghai, there were zero vehicles sold. Now, Tesla has been running one shift on a closed loop with one shift on a closed loop at Gigafactory Shanghai, which means that they could be running full steam ahead and they're not getting the same amount of production they were getting before. Plus, they're not selling any of those vehicles in China. They're all being exported. So I'm very curious to see what's going to happen with second quarter results. I'm thinking that everyone's going to get crushed. And when those results come out around July, late July, August, and it's going to be a good time to invest. But the other thing is, I think the turnaround is going to be really quick. And that's one of the reasons why, like I said, I backed off on selling options. I'm not looking to lock in losses at this point. I made my money on the way down. And that's a problem with people who write options on, who do buy rights, who write options on positions, cover calls on positions that they own, is that you're making so much money on the way down that you forget that sometimes it's got to end And when the market turns around, it's going to snap back pretty quickly. Those shares are going to get called away. And then you're going to be stuck trying to buy back those shares at a higher price. You're going to wait to do it because maybe you think it's going to come down, but maybe they don't come down at all. And maybe you just get caught behind the eight ball, right? That's always been my consistent worry with Tesla, which is one of the reasons why when I sell options on Tesla, it's really, really, really far out of the money. And I may have to unwind a trade and eat a loss once a year on those. And I know that I'm sacrificing some income generation, but I'd rather do that than pay taxes on all my gains. So, yeah. Okay. Any other questions? Well, if not, I am going to call it a day for today. I wanted to thank everyone for the Arvane. I wanted to thank you for the super chat today. And if you guys get a chance, check out the video I made earlier today. It gives a more complete view on my view. So stock tips. No, well, so it's actually I can't run out here on YouTube because of my profession. I can't actually tell you to go out and buy or sell any particular security, but I'd start taking a very hard look at financials and start making a list of which ones to invest in. And I would even think really hard about investing in some of the older type of financials that are involved in an investment banking. Conditions for them are about to get really good. The new issue market for bonds is going to get really, really hot, and mergers and acquisitions are going to get really, really hot for them. And I think it's going to be really, really good. So, MP Materials has been the best back. Zam and all the others got clobbered, and some of the ones beat up ones have got a good price, like Desktop Metals and Latch for $2. Yeah, yeah, yeah. There we go. That's a good point. Michael Will says, thank you so much, Michael Will. You're always a frequent guest. Always good to hear from you guys. I'm still going to continue to do these regularly. Bring any questions you like. Yeah, BYD is my only green stock. Yeah, it's actually for I don't know if I'm up for the year in this stock, but because I don't actually look at it very much. I own a couple hundred shares and I don't look at it very much because it's a really, really long-term buy for me. Is Google a buy? Probably at these levels. Like I said, though, I'm not going to give you advice to buy, sell, or hold a security through YouTube. It's actually not permitted. Is it a buy, though? Well, let's take a look here. And then I did not take a look at their quarterly earnings. This is one of those companies that's so large that I mostly just have it through. I don't own individual shares of Google anymore. I just own that through in ETF. Let me see here. All right, and PDE per share. So in terms of okay, so ask yourself what kind of company is Google at this point? Is it an advertising company? Is it a technology company? I think it's all of those. The PDE ratio at $20.20 looks pretty attractive at this point, and it's actually pretty close to the mean price to earnings ratio for the entire S&P 500. It's about 20% higher than like historical PDE, right, for the whole S&P 500, which is in line for what you would expect for a growth stock, even though this is a growth stock that's like super, super large, right? So yeah, I mean, it is possible that this is a buy. It's definitely not overvalued at this point. Let me see here. Missed earnings by $1.27. Let me I'm gonna take a closer look at Google for you, and I'll have a better response for you tomorrow on that. Okay. And yeah, if you're gonna be on tomorrow, I'll talk about that a little bit more in depth. Anyway, thanks very much, guys, for your time today. Always happy to hear from you. I will see you tomorrow. Bye bye.